Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Jam-packed show today. We want to talk about the steel stocks, U.S. Steel in particular. We want to talk about AMD, Fitbit, Google, banning cryptocurrency ads. We have two guests too. 8:15 we have Evan Schnidman, who is the CEO of Prattle Analytics, and then at 8:35 FuturesTrader 71 will join us. You can find him at FuturesTrader71.com. Plus we have earnings from Signet and Express. So a lot to get to today. Joel, what's going on in the S&Ps?
We are trading firmly in the green by 8.5 handles. Matched the low from yesterday. This is a little bit before midnight. Yesterday's low, 62.50. We got the 62.25, turned things around. Pre-market high, 27.83.50. Now, there's not a lot of resistance up here in the 80 handle, but the daily pivot. So keeping an eye on that pre-market high, 83.50. Looking at the crude oil market, crude is up 45 cents here at 61.16. Holding up over $60, but had some good movement in crude as of late. Gold in the red by 7 cents at 13.2650. Silver in the red just by less than a penny here at 16.62. And Bitcoin down under $9,000 here, down 3.43% at $8,784.66. Dennis was just talking how he really enjoys the ads on Facebook or just cryptocurrency ads, Dennis.
Well, Facebook got rid of the ads, and I applaud Facebook for that. But I'll tell you, in my Twitter feed, it is littered. And that must be because I checked, on Bitcoin stuff. It is littered with crypto ads. And these ads are so aggressive. I'm not surprised Facebook banned them. And I'm going to be surprised if Twitter doesn't eventually ban them too.
Wait,
because
just to be clear, they
can't be coming from the US because the regulators would be saying that's not even legal. I mean, they are making claims like Bitcoin, the best investment ever, buy now. It's got buy Bitcoin. It's got pictures of like a Lamborghini there. Just sitting beside it. It's like aggressive marketing that is not allowed in the U.S., but these ads are probably coming from other countries where the regulation is not there. One was an exchange in Singapore, I believe. And it's just the ads are in my Twitter feed because obviously it's coming from Singapore and they can get away with that. And I look at these ads and I cringe. I mean, if you're just reading these things, they're making outrageous claims that aren't true. So now this morning, apparently Google is banning these ads as well.
Yeah, Google has now banned the ads on Google AdWords. So that Google by itself is 45% of the U.S. Digital ad market. Facebook is like the other 45%, then like 5% for everyone else. So that's a big development for. I didn't realize, or I forgot that Facebook had already banned them. Are you sure that happened?
Yeah, Facebook banned them.
Okay, I forgot that happened.
And after that, I'll tell you, that's when I really started to notice them on Twitter. So they probably got banned from Facebook. They're like, oh, we got to pump these ads somewhere else out. So they upped it on Twitter. Like, I mean, every morning I wake up and I'm greeted with some Bitcoin ad telling me it's the best investment ever. I don't think that's true. Maybe it is, I guess, if you bought a 0.0001. I don't know. But just talking about how aggressive the marketing is in these ads, I cringe to think about it. And obviously, I've got my CFA charter, and this is something they teach you in the ethics class, and it's about, the GIPs and aggressive marketing. But holy cow, I mean, these ads are so aggressive that they make even anyone probably question, is that really true? So, I would love to see these ads banned on all platforms and Twitter as well. So if you Twitter, any execs, if you're listening, I think you should ban those ads too, because you're catching people with outrageous claims. People want to get rich, and maybe Bitcoin does work out. Maybe it does work out for them, but you can't just make false claims trying to basically sucker people into buying it.
Anybody trading the Bitcoin futures here? Because this is a real interesting setup here. And this is basis.
Does anyone trade Bitcoin futures? What was the volume yesterday?
Oh, Dennis, the volume on the daily.
Did anyone trade it yesterday?
Yeah, this is different. It had those weird couple days, Dennis. And
Is it starting to trade?
Yeah. Well, it's you know what?
What's the volume? I haven't looked at Bitcoin.
11,400.
How many?
Traded 11,400 yesterday.
Well, let's trade in some. Put it in perspective, though. How much the S&P futures trade yesterday?
Okay.
We won't. That's a bad comparison, but I mean, it's got a long ways to go before the institutional players probably
2.2 mil. 2.2 mil.
Yeah.
So
it's got a long ways to go yet. But okay, they're getting some volume. It's better than that like 10 contracts you were talking about when we asked you this a couple months ago. So they're trying to build it up.
SIBO, wait, I think SIBO had yesterday. SIBO had like one contract trade yesterday.
No. You're looking at the Merck contract. I'm looking at the SIBO contract.
Okay, so the Merck contract did only have one contract trade.
Yeah.
That's insane. They're gonna delist that, aren't they? They can't trade one contract and they'd be paying any bills there.
No, I'm looking at SIBO and I see in Thinkorswim and
SIBO's 1 Bitcoin. The Merck is 5, right? So it's 5 Bitcoins as a contract.
Yeah,
is that right?
Yes.
Yeah, I'm telling you guys, I see the volume yesterday on. I don't know what you guys are looking at. The volume.
I don't have futures quotes. So I'm not looking at anything.
I got 675. I got 675, but
675 contracts trade on the Merck.
Yeah, 6-7. That's actually picked up a little bit. The Merck.
Yeah, sure it has.
Yeah, it traded. That traded over 3,000 yesterday, so that's come back to life. But my original point that I wanted to make was 50% retracement. You had to move from 5,900 up to 11,900. And this is the moment of truth right here for Bitcoin. They're right at the 50% retracement. So they better gain some traction here. 8,500, 8,600 right here. And we may be testing the lows. In fact, I might pick up a little bit here and, just a little
You're going to buy a Bitcoin? You didn't nibble on your toe in there again?
I like it, 8,500. I do. I like it here. It's a classic setup here. I well-defined risk here.
I mean, you can trade anything technically. And on Bitcoin, that's really all you got is the technicals because there's really nothing fundamental to talk about. So for the most part, you've got the technicals to trade off and that's it. So you can trade anything technically. So why do you like the setup? What are you seeing?
50% retreat. I have the chart up there. You had the low of the move.
I've seen my ugly face.
59.10 was your low on February 6th. You had a rally up to 11.8. Perfect, 5.9 move. You take half of that, it's like 250. You add that, 8,500, your 50% retracement here for Bitcoin of the rally off the low. So if it's going to find support and rally, it's going to be right here. Yeah, currently the futures are trading 86.50. So it's just a setup. I mean, I'm not going to go crazy and let it go below 8,000 or anything on me, but I like it. Support is support. But let's talk a little bit of stocks here. And
sure.
Angie Baby is taking you for a heads up last night on Cigna. Now,
I tweeted this out, and this was interesting. There was somebody aggressively selling Signet last night, SIG. Obviously, it was due to report here this morning, but closed at $47.91. Somebody comes out with an iceberg selling it at $45 ahead of the report. So they're selling it down $2.91 before it reports the next day. I'm like, either this guy knows something or they're crazy and actually I bought some stock at 45 because I'm like $2.91 lead. That seems like a pretty good lead. I mean, even if they miss, it's probably going to go down, but I like the risk reward at that. But then it came back up. So the 45 went and then they sold there was another person selling another 10,000 at 45.5. Sold a lot of stock down there. You could probably add up the volume there, Joel, just after 4 o'clock, how much stock they were selling between 45 and 45.5. And then it went back up and went all the way back up to 48. So I actually was able to get out last night too. Thank goodness, because they come out this morning. I actually thought about going short just because I was like, I wonder, that person knew something maybe on the exchange and maybe it is going to miss. So I thought about going short up there. It was a 47.60 bid I could have hit last night. I should have did it, but I laid off. And obviously now the news comes out and Spencer, are they disappointed?
The Q4 adjusted EPS, $4.28 versus $4.25. Sales $2.29 versus $2.24 billion. So fine on the Q4, but the guidance is the real issue there. Oh, this is bad. Fiscal year adjusted EPS of $3.75 to $4.25. That's the estimate, or that's the range they gave. The estimate was $6.09. Sales of 5.9 to 6.1 billion. That's pretty much in line with the estimate, but the fiscal year EPS missed by like $2.
Well, I think they must have known something that it wasn't going to make $6. I mean, if it's making $6, it was trading with a PE of like 6 or 7. So maybe they expected it to be bad, but it was really bad. So here we are, obviously trading down significantly. The pre-market's trading 43.40. So the person who was selling it last night, 45 and a half, is obviously correct with that sale, because it's now trading down another $1.50 from where it was.
What time are they doing that, Dennis?
Oh, let's go look at the tape. I feel like it was like maybe like 5 o'clock, like an hour after the close.
Okay.
You see the trades? You should see it after hours, like the big fall. It was trading flat, and then boom, somebody came out iceberg. And when I say iceberg, it was 45 for 100 shares to sell, and you lift it and it just sits there. So they're selling more. And I don't know. I'd say it probably went 10 or 15,000 shares got bought at least down there and sold at 45, and then another 10,000, 45 and a half. So I'd say somebody sold like 25, 30,000 shares of between 45 and 45 and a half. Ridiculously aggressive. They could have got done a lot better than that, because the stock came way back up, obviously. So, if they did know something, they don't know what the hell they're doing trading, because they could have got done at a hell of a lot better price last night than that. But 47.91, 45, so they're up some money here now when the stock's 43.35.
Yeah, you got a pre-market low here of 43.10, and we are not far off that level.
We're talking SIG. Somebody was just asking what symbol we're talking.
Signet. And you're not far off that low. So that tells me there's some more work to do on the downside here, since we're only 25 cents off the current low. So I'm going to go to my daily charts. And on my day, I'm going to have to go out farther than the dailies here, because we are destroying the former lows of the move. Let's go to a weekly. I mean, hey, we've come this far, this fast. I mean, you want to test $40? I don't know if we got
2012 levels. Yeah.
Yeah.
I think so too. I think it could test 40. BTFD has been working. We're going to talk about that with Dick's Sporting Goods in a second. So I don't know if it works in this case. That guidance is horrible. I mean, it has been working in a lot of things. Maybe if it got down to 40, maybe take a swing at it, maybe. But, scary. The guidance is so bad that, as you get more institutional sellers coming in, you wonder if it, if this is going to bottom here today or not. I don't know if there's a washout low here going to happen. And last time, remember, the stock was around $75 when it reported. It lost $15 on the open, and then that day lost another 10. So you're talking, you can see the chart back in November, like you're talking the stock losing, 25 points almost on that earnings report, 75, so about 30%. So when you see it down 10, well, lost 30% last time, reported disappointing guidance. Now, I don't think it's losing 30% here today, but is 40 out of the realm to test? I agree. I think it could test 40 today.
42, if you want to go to some weekly lows, you had a pair of weekly lows at 42. This was back in August and July, late July, early August. You bought them a couple times at 42. So long, take a look at that level. And then you had a pair of monthly lows just under 41. So I think if you short this, if you're looking for more on the downside, you got a big position. See if they could take out the pre-market low. See if they'll give you any stock at 43, 42, and 41. I mean, I think that, better places to cover short, obviously, than to go long. But keeping an eye on that pre-market low, 43 right now as we speak.
There's just not much in there is what Joel is saying. And I agree. I don't think there's much there till 40. Jump over here to a couple other stocks reported. Smaller ones this morning, but there was a few. Express, EXPR. That's the mall retailer, isn't it?
Yes, it is.
How'd they do?
A frequent stop of mine back in my high school days. Q4.
What do they sell? Was it clothes?
Yeah, just clothes, just shirts, pants. 37 cents.
I've never been in an Express.
They're not for you. 37
Why
cents.
not? Why are they not for me?
They're like
I want to know.
I guess they're like a
I'm not
Teeny-
pretty enough
It's
for this.
fashionable.
They're
It's
like
fashionable.
teeny
As I sit here in
boppers.
my hoodie, unshaven, I'm maybe not pretty enough for express
Maybe not.
express clothes.
Maybe not.
It's a teeny
I'm
bopper.
looking rough though. This is as rough as I get
They-
after this cold. So.
It's a little rich for your blood, I think. 30,
Oh, it's the money. I gotcha. Yeah. No, if it's expensive clothes, I'm out.
37 cents versus 32 cents on the EPS sales, 693 million versus 686. Q1 EPS guidance, a 4-cent loss to flat versus a 1-cent loss estimate. Fiscal year EPS guidance also coming in line at the 32 to 46 cent range. And what else did I see? Nope, that's pretty much it.
Getting a little left. These retailers seem to do okay if they don't completely SH blank the bed. It gets above 8, it starts to open up too. So let's see what it does. It's got some work to do to really get looking. Like you got that double top, you could argue 777. That's right where we are in the pre-market 775. If you get up over there and then get up over 8, then you got a gap between 8 and 9. I mean, that's where it needs to get to today. And if it doesn't, if this isn't the catalyst to take it over there, then it might start leaking again. But let's see if it can get up over 780. It gets interesting.
They got a little excited. They took this up to $8.35, and then they backed it off under $8. So that's not great news. When you gap down before, you had a high of $8.21. So keep an eye on that whole area, $8.21, $8.35, and then as you mentioned, you get into that gap area. Just it's leaked quite a bit, so I don't know if we're going to get back up to that high. But once you clear that 821, then you're getting into that whole gap area that Dennis mentioned, and that takes you up to 894. But let's see what happens. See if we can get up and take out that pre-market high. I'll just show you the dailies real quick before we move on, and you guys could see the gap in it. Why is this not giving me my daily chart? Well, Spencer has the charts up anyway. So, all right, let's move on.
The last one I reported here this morning is Vera Bradley. The stock actually got a lift here, but is now leaking here after the earnings report. It got up to 11.24, now offered at 10.35. So it looks like it wants to go red here. Spencer, details on Vera Bradley, another retailer.
33 cents, which beat by a penny. Sales 132 versus 130. $1 million. Q1 EPS guidance coming in better. 13-cent loss was the estimate. 10-cent to 8-cent loss is what they say. Sales guidance for Q1 coming in line. Fiscal year EPS and fiscal year sales guidance both coming in mostly in line.
Doesn't sound that great. Not sure why they bought it up. It was very light volume. Only 100 shares trade up 11.24. A few hundred more trade at 10.50. But now the best bid is way down at $9.01. Offer 10.35. I think this is going red today.
All right, VER or is it VRA?
VRA.
All right, let me.
It'd be better if it was VERA, though. I agree with you. Maybe VERA was already taken. Let's see. No, it wasn't. Okay, Vera Bradley, you should change your ticker. Anyways, VRA. I guess they want to be on New York, though. So.
Big pop, but you talked about the fade there. You popped up to 11.24, but now we're back in the $10 handle. Let's look at the dailies on here. And on the daily chart, you have a pair of highs at 1070 and 1078. Also, that's buffeted by 1055 high. So up and over 1080, we get a chance to test that pre-market high. But there's been pretty good resistance there. On the dailies, real good support if you get a chance to buy this in the lower $10 handle. Your last three lows between $10 and $10.11.
Do we have a 10:15 guess or 8:15 guess?
Oh, wow. I lost track of time, and we did. Dennis.
We do. Hey,
Wow.
Denny with the save. It's 8:19.
Dennis
Sorry,
Dennis with the save. Wow. All right. Great call, Dennis. We have an 8:15 guest. His name is Evan Schnidman. He's with Prattle. We'll be right back in a moment. Welcome back, everyone, to Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick. We are on now with Evan Schnidman from Prattle. Prattle.co is their website. Evan, how's it going today?
It's good. How are you?
We're doing well. We're doing well. So it's been a while. I want to say almost a year since we last had you on this show. And just to refresh our listeners, Prattle, you guys do text analytics where you take written statements from the Fed or from earnings calls, and you put them through some, I assume, crazy, complicated AI that I don't understand, and out it spits a sentiment that based on their language, basically a bullish or bearish sentiment on what they're trying to say. Is that a fair assessment?
Yeah. Would it be helpful if I walk you through the
sure
a little bit too? I think.
Go for it.
Okay. So we analyze the content of both central bank and corporate communications and generate a singular quantitative sentiment score for each and every one of those communications. So for the Fed or for the 20 central banks we cover, this means we analyze speeches, press releases, meeting minutes, testimony, anything that comes directly from those central banks that's likely to move markets. And then on the corporate side, we're analyzing earnings calls, and actually in a couple of weeks here, we're rolling out a tool analyzing all publicly available primary source communications, so press releases, things directly on the corporate website, things that are likely to move stock price for that company. Where it gets really interesting is that we've actually built a unique lexicon for every publicly traded company in the United States. So every individual company, over 3,000 companies, we've built out a unique lexicon specific to how that company talks and how the market is likely to respond to their communications.
Okay, so then explain how it works, like using it. So like if I were to use it, how do I use it? How does that work?
Yeah, so for our corporate data, what we're actually doing is we are controlling for all of the known quantitative factors that affect price movement. So all the fundamental and technical indicators that could actually affect price, and isolating in on the residual price movement unexplained by those factors. On average, that's about 20% of price movement that's unexplained by those things. So we've actually built a lexicon specific to each company based on how the market has historically responded to their prior earnings calls, right? So when they come out with a new earnings call, we're able to produce a singular score that represents what the likely cumulative abnormal return is over the next 10 days. Now, that's not to say the signal decays in 10 days. It actually holds up quite a bit longer than that. But what you're actually getting is functionally an automated analyst report. So you're getting all of your fundamental data is in there, but you also get the headline score. So what's that CAR score? How is it going to respond in relation to the benchmark based on our analysis of the earnings call? And then we've also got a whole bunch of metadata. Speaker. So we identify each and every speaker, including both corporate officers and analysts. We also identify the sentiment of each speaker and what percentage of time they spoke. So if somebody's speaking a lot more than usual, we can identify that. We saw a lot of CFOs speaking more than usual this quarter because they're talking about the impact of the tax legislation. And then we also identify the most salient remarks on an earnings call. So the couple of sentences that are most likely to move stock price. So if you don't want to dial into an earnings call or read a transcript or even read a long-form analyst report, you can get an automated, essentially one-page analyst report directly in your inbox as soon as that call wraps up.
That's what I was really getting at. Is how do you get these reports? Is it an email or what?
Yeah, so right now we've got three different delivery mechanisms. I apologize. You can get our data via API. So for those who are so quantitatively inclined, that tends to be the best way to go. But you can also sign up directly on our website, get access to our interactive portal. So on the desktop there, and you can get email alerts. But in addition to that, we just rolled out a mobile application. So we announced that last week. So both iOS and Android, you can hop right on there and access our data. And so in fact, on the mobile app for a limited time here, if you sign up for one stock, we'll throw in the 30 stocks in the Dow Jones free of charge. So it's obviously for a limited time, but we're trying to get people to understand that you can automate huge chunks of the research process here.
So can you give us a sense then, you mentioned the part about CFOs speaking more than usual this past quarter to talk about the tax reform. Any insights? Any other broader insights, or you can go specific insights that you gleaned from the past quarter?
Yeah, so we actually did an interesting study. Not only were CFOs speaking a little bit more than usual, they were also a little bit more optimistic than usual. Typically, your CEO tends to be a little bit more positive than your CFO. What was also interesting is we did a study looking at the language that was being used this particular quarter, and lots of talk of CapEx, more so than usual. And we think that ties directly to the tax legislation as well.
And what about for central banks? Sorry, I forgot what I was saying there. Central banks. We have the Fed, of course, next week. Pretty much assumed that they're going to raise rates, like 88.8% chance of that happening. So what are you looking for out of next week's meeting?
Yeah, so I think the big question next week is not if they're going to raise rates. I think that they will, and I think there are sort of two moving parts that people are going to be really paying attention to. The probably more important one for the long run is actually how Powell does in his press conference, which is going to be very interesting, very telling. He's a pretty quiet, restrained guy, and so it'll be interesting to see how he does being bombarded with questions for 2 hours. And then I think the other big question is whether the summary of economic projections, the SEP, whether that's going to post essentially a dot plot that shows 3 hikes this year or 4. And I think it's an edge case, but I think that there's a possibility that they actually go to 4. I think 3 is probably still a base case, but that we're right now tracking Fed sentiment, and it's coming in a little more neutral than I think it would need to be. It would need to be a little more hawkish to indicate 4 hikes this year would be the baseline.
So coming in more neutral now, and obviously that'll probably there will be some adjustments at next week after the meeting and the press conference. So, but right now you're saying that your readings indicate that the Fed is more neutral than the forecast would indicate, based on their past speeches.
Yeah. So I mean, right now I'm looking at our Fed sentiment, and momentum is at 0.03, which is we move around 0, so that's marginally positive. It's trending up, but we actually had a pretty healthy dip there over the last couple of months. Start of the year was pretty strong sentiment, and then really dipped in late January, early February, and starting to come back a little bit, but it's been pretty neutral. I mean, we haven't fallen below the neutral barrier in a long time, but we really haven't gotten very high either. So we just haven't seen that much sustained hawkishness.
All right, Evan Prattle has been on with us. He's the founder and CEO. I'm sorry, Evan Schnidman. He's the founder and CEO of Prattle. The reason I like having you on, Evan, is was it last year or the year before that the San Francisco Fed actually released a study that's saying that your AI does accurately relay what they're saying. I think it was last year.
Yes, we actually had 2 studies. I think it was one 2 years ago and last year as well.
Okay. So Evan Schnidman has been with us. He is the founder and CEO of Prattle. You can find out more by going to Prattle.co, or I get their app, which I assume is just called Prattle. On the
it's Prattle Equities.
There we go, Prattle Equities. All right, Evan, thanks so much for the time today. Have a good one.
Thank you.
All right. And we're at 8:30. So do we have any imbalances of note?
We got retail sales.
Oh, I forgot about
down a percentage versus 0.3 estimate here. So retail sales are not great. Looking at the SPOOs, we're selling off a little bit. PPI up 2%, 0.2% versus 0.1%. Estimate. So market not really reacting strongly to these numbers. We have pulled off that high of 83.50. Looking mid-range on the session for support is 74.50, but not big movement. Not big movement off that number at all.
Yeah, just kind of hanging out here. But, there was big movement in the market overall yesterday. Maybe just the next 3-4 minutes, just we'll talk about the movement in the tech stocks yesterday because it was a bit of a tech wreck. You had pretty much every tech stock getting destroyed yesterday. I don't know if it was profit taking. A lot of these have been on an incredible run, but you can look at the reversal there in a stock like Micron. You can see it the most. And Micron has been hot as hell. 63.42 got up to, which was up over $3. Gave it all back and closed in the red yesterday, but you can look at stocks like Applied Materials significantly down yesterday. Intel was way up, gave it all back and went into the red. Apple obviously down $3, but then bang, really got destroyed. Facebook was down $4. Amazon was down about 20 points at one time, so it got the beats there too. Netflix was down again after having the red candle from Citron the day before. Did get follow through the next day, so it was down again. And Google also weak yesterday as well. Put in a double top if you want to talk yesterday. Just looking at the Goog, 1177.05 was the high 2 days ago, and then yesterday the high 1176.76 for an $1,100 stock. Those two are very close to each other. We peeled off $30 after that, coming back down. Joel, thoughts as these tech stocks really got hit yesterday? Do you see follow through here today? What are your thoughts here in the techs?
Some big moves in all of these stocks. The SPOOs are trading up this morning here. We're up 0.24%. Apple, the tech stocks are trading up a little bit more than that.
Qs are up about 0.6%, so we're up a little bit more.
Let's see if they go red. If it was just like a 1 day thing and, they're hold on the sell off and then they're turning around and going north, then these won't go. I don't see any of them red on the session. Just for an example here, Apple, that closed at 179.97. That was off the low of 79.24. So until they go red, you just got to think, just a little bit of a sell off yesterday. We're rebounding. For Apple, you did have the all-time closing high. That was on Monday at 181.72. So that's only $1 away if you're looking to peg that all-time closing high. The all-time high was made yesterday at 183.50. SPOOs?
My thoughts here are potential. A lot of times when you see stocks get hit hard, and then they open down the next day, then you get people, okay, well, it's too much too fast. But actually, when you get the pop up the next morning, a lot of times you see, people saying, well, on Amazon, for instance, up $10. Okay, I'm going to lighten up because of that ugly candle there yesterday. I don't want to take any chances. I think the stocks are going to go red here today. And I'm making a bold call here because we are up substantially on a stock like Amazon. But if they do go red, obviously then you start looking at yesterday's lows as the next support. Take those out, then a lot of these stocks, tech stocks, could be in a world of hurt. So I think today's rally actually is not that great. This morning's rally, not that great for the tech stocks. I would have rather, if I was bullish, I would have rather seen them open down today, maybe wash everybody out and then rally like a 2-day move thing. But because we're not seeing that, I think you're going to have some sellers that are, that were buying tech stocks yesterday, happy to sell into the pop here today. And if that, equals more sellers coming in, that could push the stocks to the red. So I think the techs could actually go red today. Just a feeling.
Signet Jewelers. We had talked about how there could be some more downside. There is more downside here in Signet. We are now trading under $43 here at $42.85. So still continuing to leak. Maybe we will get a shot at that monthly lows there at the $42 level.
All right, 8:35, time for our final break of the day as we grab FuturesTrader 71. We'll be right back. Welcome back, everyone, to Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick, and we're on now with FuturesTrader 71. FuturesTrader71.com is the website. How's it going today?
Good. Thanks for having me on.
What are you seeing this morning?
So I do this Trader Bite thing every morning at 9 o'clock Eastern, where I'll go over what I planned for the prior day, what happened, why my plan didn't happen or why it did. And yesterday, really everything was pointing upwards. My primary, my trade of the day, really the key trade of the day, the first two scenarios were both pushing lower and then extending higher into 28.10. Now I'm going to talk futures, S&P minis mainly, although I trade other products, the S&P is the most popular. However, with this Tillerson news, we ended up with what many would call a bearish engulfing candle. We basically pushed to highs at 28.07 or so, and then we finished below the prior day's low, and we still have a gap below us from non-farm payrolls on Friday, which most people think a bearish engulfing pattern means the top is in, at least temporarily. But statistically, believe it or not, a bearish engulfing pattern ends up closing higher 2/3 of the time. So the way I trade is I use volume profiles and overlay statistics on whatever scenario or context I have. For today, the bounce up that we saw overnight up to the 27.8350 high, that's so typical of this pattern. The 83.50 was kind of the neckline of Monday's low versus yesterday's trading. So we lost Monday's low around 83.50 and the market retested it overnight. Very technical. So bottom line here is it's anybody's guess. It's really a function of who takes control early on. The big caveat this week is rollover and expiration. We have quad witching Friday. We've got a century figure above a 2800 strike that has been tested and retested. We just failed to maintain a close up above there. We still have today and 2 more days to expiration. And so a lot can happen in the meantime. Volume's been very atypically low. We're trading about 25% below the normal roll volume. The roll is slow. The roll is actually happening at about 45% below its normal pace. Just weird stuff going on right now. So for me, I'm trading from the short side as long as we stay below that overnight high, the 83.50, and that's what I'm looking at. My targets are the gap zone below that we left behind from Friday. The extended target's 27.3850. Which is what I call the scene of the crime. That is basically where the auction was interrupted on Friday by the strong non-farm payrolls. The last print before the number came out was 27.3850, and we generally close those or touch those. It's almost like a gap close, and that's way below. So if we start to sell off, key targets 27.56, 27.50 strike, 27.3850. That's quite a ways from where we are now. So there has to be more kind of geopolitical news or something. Otherwise, really, it's one of those days where you can make a prediction, but overall, it's a mixed bag coming into today. I see the treasuries are higher. I see gold's just teetering on unchanged. I see crude is strong. It's been weak the last few days. A lot to process. I know it's like drinking out of a fire hose, but that's basically how we're set up right now. So I'm just going to sit the open out for the first 20 minutes and see which side is dominating. I think we're going to have a pretty swingy open, and then one side or the other is going to take charge, and that's the side I'm going to flow with.
Is it concerning to you that the S&P futures did not make a new high on the move, but the NASDAQ futures did? And what does that mean?
Yeah, there's a lot of divergence there with the NASDAQ. I mean, I come in some mornings and the NASDAQ's up 30 points while the S&P is up 1.5.
Right.
But the tech stocks are just roaring, and they're well represented in the S&P. They carry about 27%, I think. The last I checked, 27% of the S&P's weighting is in techs. But it's hard to say what that means. My expectation, to be honest with you, with the non-farm and inability to close the gap and the push higher, my expectation is the S&P is headed for new all-time highs, and we were making pretty good progress Friday and Monday. Monday looked like a rest day, and that's why coming in yesterday I was bullish, and that didn't work out. I had to reverse my tone once it got below 27.95. But overall, I just don't see a lot of argument for, the market tanking again. Remember, the news yesterday was Tillerson. The CPI was good. We jumped 10 points on CPI. Then Tillerson comes in 10 minutes later and just smacks it down about 10 points. And then the market starts higher and then just sells off on the news. Markets don't like uncertainties, as you guys know. So there's a lot of mixed stuff going on. The biggest of which, the biggest thing that makes me trade quarter size or so for the week is rollover and expiration. There's a lot of weird stuff that goes on.
Yeah, I want to talk with you about that. We're on the line with Morad Asghar, Futures Trader 71. Couple questions here. First, what was your trigger 895 yesterday? I mean, we had a lot of ping pong action. I think at one point that might have been mid-range on the session. Was that something you were looking at, or what was your trigger at 27.95 yesterday?
So let me clean these charts up. Basically, the way I look at things is, where do we open, what do we test, and where do we fail? And once we got below this blue line, the blue line this is very basic stuff, folks. I'm a day trader, so I keep it really simple. My game is to keep my win rate high and to trade size, keep risk small. And so once it got below the mid of the session, which was at 27.97 at the time, and it extended the first hour's range down, basically we pushed higher, we pushed back into the range, into Monday's range. And I'm talking pit session only. I'm not looking at the Globex. Once it pushes into the range and tests value high, so you see that right here. I don't know if you can see my cursor or not, but it tested it. It tested this 27.95, which was value high the prior day. The prior day was balanced. And then once it starts to break in, it's a high probability test of the prior day's point of control, which is the most traded price by volume in the session, which was 27.89. So my trigger is 27.95 on a pullback higher. My first target's 27.89. My second target's 27.86. And then remember, 27.83.75 was the low of Monday and the high of the overnight session. That's not a coincidence. What the market has done overnight is it has floated back up to Monday's low and is holding steady inside of value. I wish I could put a marker on here, but the black area right here is yesterday's value area. We're opening inside of range, inside of value. That's why I expect turbulence. This is like a jet wash right now where we are. So as long as 83.50 stays intact this morning, which I doubt that it will, it looks kind of bullish to me. The overnight session looks kind of bullish to me since the European Open. We've just been pressuring higher. As long as 83.50 stays intact, I am laying off of the long side. Once we break in, I'll look for a pullback down to 75 or so, and then I'll start to trade with them. Look for 86 and then start targeting 95 and then 2,800.
And on what time frame are you looking at here? How would you define its holding? Are you looking at a 5-minute chart, a 10-minute chart, 15? What's your criteria for it holding? Because to give you a good example, yesterday we did take out the pre-market high, which was 05 even, and Monday's high was 05 1/4. We went to 07 1/4, but came right back down through it. What's your time frame to define breaking 83.50?
So it's if you look at just a simple statistic. On every swing, what is the mid of that swing? So the last low, last high divided by 2, that price. Once we push through, as long as we're holding the mid, so if we breach the 83.50, once we hold the low it put in this morning to the high it just put in, as long as it holds below the mid, I'm looking bullish as long as it broke that level. I am off. I pull my foot off the gas if we break that midpoint. That is kind of an old kind of pit trader thumbnail thing, thumbnail rule of thumb. And so it's, to me, it's not a, I don't like to use time. I know that's not orthodox or whatever, but I don't like to use time when I'm trading, except how economic figures affect things. The only thing I use in terms of time is what did we do in the first hour, which is called the initial balance, those yellow lines up top on the chart. But other than that, I'm looking for how easily is it floating up versus pulling back, or how easily is it dropping versus floating up. And this market, until February, this market has been like trying to hold a beach ball underwater. It takes a lot of pressure to keep it down, and as soon as that pressure comes off, it pops right out of the water. And that's how the rallies have been. So I've been pushing the long side. So to answer your question, I have to wait for 83.50 to be breached, and then I'm looking for the quality, not the time frame, the quality of that pullback, and I'm looking for areas to lean against. So is it struggling on the way down? Is there an area for me, some structure that it created, some simple support resistance that it has created this morning that I can lean against for the long? And I'm always accepting that this next trade has a 50-50 chance. It's either going to win or lose. Add that to the stack of historical, statistics that I've accumulated. So I'm not attached to any one trade. Okay. I'm better off keeping with tossing the coin than trying to stack the odds as much as I can and waiting for more and more information. And that's my style of trading. It's a quick in, quick out. And that's what I've done for the last 17 years, starting with stocks. So
before we let you go, could you talk about the rollover a little bit and, the kind of activity, what actually takes place during the rollover, and then what time, sometimes it creates gaps and, little air pockets in the markets during the rollover.
That's right. I mean, rollover, defined simply, Friday at 8:30 a.m., the March S&P contract expires. And the June contract is now front month. It's been front month officially since last Thursday. And everybody that's in the March contract that wants to continue to hold their position has to get out of the March contract, whether short or long, and get into June. So what ends up happening is people will use calendar spreads. The bigger money uses calendar spreads. Calendar spreads take precedence over the first in, first out method that's used in futures. So you could be the first in line on a fill, but if a calendar spread has been entered before you and the calendar and the spreader happens to match both contracts at your price and they have 1,000 contracts, they'll trade ahead of you, believe it or not, even though you've been there all morning. This is something few people know. They sit there and they're like, how could it trade 1,000? I don't get filled. So you get these weird anomalies. Also, the action is dictated by what is being pegged. We're right underneath a major strike at 2,800. And those people holding those options have to keep hedging their option position into Friday. And the way they do that is to get in and out of futures. So they're buying and selling futures, not on technicals like we know them. They're buying them based on how their option position, a relatively large option position for everybody that's trading that market, how that is responding delta-wise. So you end up with this weird, jagged movement. It'll consolidate for long periods of time, and then you'll have an explosive move, and then it'll consolidate, and you'll wonder how you're going to make your money back. So this is traditionally, for me, a poor return type of week. It's a week where I always minimize, and that's what I suggest, either watch or minimize your size, because there's a lot of crosswinds. There's a lot of riptide in this kind of trade. I still trade from the same perspective, from the same plan, but I'm open to the idea that at any given point, some guy may come in here and just sell 10,000 for absolutely no reason whatsoever apparent to me, because I don't know what their option position or what their stock position is elsewhere. So those are the things that you have to be careful with when it comes to rollover. I'm not sure if that answers your question.
No, that's great point. We've been on the line with Morad Askar, better known as FuturesTrader 71. Thanks. Enjoy talking futures with you. We'll have you back on again soon.
Very cool. Thanks for having me. Take care.
All right, S&P futures are creeping back up towards the highs of the session. Nice point there. 83.75 was Monday's low. Pre-market high 83.50. So that's a big level to keep an eye on this morning. Pre-market highs and lows are very important. Let's just take a look.
Before we go, I just want to, there was one point that Morad made there, and I just want to reiterate the point. It was a great analogy he made, and he made the analogy of the beach ball, holding a beach ball underwater, and obviously it wants to pop back up on you and feeling the pressure of the market. This is how I've traded for 18 years, all on that feel, looking for the path. We teach it as at Bright Trading as a path of least resistance. And, looking at it as, going with the path of least resistance. And, sometimes it's very hard for a trader, especially a newer trader, to identify. But once you get seasoned into the tape reading skill set of it, it's something that's very hard to teach. But you can feel the market. And I can feel almost from my execution sometimes and say, oh, I got in that too easy. And if you can get it in too easy, you're probably on the wrong side of the trade. Now, that was more from a scalping perspective, so it's not quite as simple as it used to be, when we were market makers mainly, and just feeling the trade. And you would know this too, Joel. I mean, how much, feel do you get from your execution? You can easily get into a stock. It's usually going to be moving against you. So, just that feel aspect of it. And, I love that analogy of holding it down. And that's how I've been feeling this market as well. It's like the market wants to go up on nothing. We get some news to drive it down, but then it just turns around and it goes up again on nothing. So, the market needs something, it seems like, to go down, but it needs nothing to go higher, which tells me, the path of least resistance overall is still higher. So I agree with Morad's analogy, and I agree with him on his overall sentiment on the market, saying eventually go higher here. But the concerning thing is short term here, there is catalyst to take us down. There's political uncertainty. Obviously, there's been a lot going on here out of the Trump administration, but there's just, we're out of the earnings season here. But, the tech stocks, for instance, had a bad day yesterday. But are we really going into this full-on correction here now? I don't think so, because I just see a lot of potential buyers underneath, and I still feel like overall the pressure is still higher.
Coming out of the chat, wanted to look at bookings.com here, and that made a new all-time high. The former
unbelievable.
Made an all-time
unbelievable move.
2,228.99. That was your all-time high. That took out the previous day's high by $10. Closed near the lows of the session. I would just keep an eye on 2170. That was your all-time closing high from yesterday. We're trading above it. So all-time closing high was made the previous day at 2206.09. So if you want to target ahead of those two highs from Monday and Tuesday, keep an eye on 2206.09. On the downside, if we go red here, not a lot in there under 21. So 2162, let's call it 2160, your next major area of support. That was Friday and Tuesday's low. After that, boom, big open area to 2130. But took a little break yesterday, gapped up after earnings. So it better hang in here next day or two and consolidate.
It's been on an unreal run. I mean, we were 1,700 at the beginning of February. Here we are a month later, 2,200. So now, you're chasing it a bit. Yesterday, what was it? It was profit taking. You saw this in a lot of tech stocks yesterday. And people say, oh, it's Rex Tillerson, or, you could give any fundamental reason. But really, market was looking for an excuse to take some profits on some of these stocks. So I don't see it as a major concern. I see it more like, okay, well, the thing's up 500 points in the last month. So you're talking about 1,700 stock up 30% in a month, basically. A big stock like Priceline. I'm still going to call it Priceline. I think it's profit taking yesterday. I think you saw that in a lot of the tech stocks, and that's why they got hit the hardest. So profit taking typically doesn't, cause the market to go into full on correction. I think, you see some profit taking. I think it can continue today. I still am sticking with a prediction that some of these tech stocks could go red, but I'm still looking at, the pullback as a potential opportunity to get in because I still think path least resistance is higher overall for a lot of these stocks.
And we got a big upgrade here today. And let's cover that one on Ford's. What do we got going on in Ford's Motors?
Yep. Ford catching an upgrade this morning from Morgan Stanley. They're upgrading it. Let me pull it up on my Pro for a second, but make sure I got it right. They're upgrading it to overweight. They're raising their price target from $10 to $15. And they're doing this because they see the Ford F-150 as being more valuable than the entire company. The entire company.
Wow.
I mean, the stock is dirt cheap. We know that. It's got a 5.32% dividend. It's just massively out of favor. Everybody thinks, Tesla's going to be eating their lunch. There's going to be less Fords out there eventually. I own Ford in my investment portfolio. I like the dividend it gives me. It hasn't been a good one. Obviously, it's been hit very hard since the beginning of 2018. I'm in from the 13s, and I'm looking at it like it's been a disappointment, but it is dirt cheap on a valuation perspective. And there's a couple of bold analyst calls here, kind of defending my portfolio here this morning. I build my portfolio on value. Another analyst at RBC was arguing that Celgene at the current valuations could go private. And I think they were just speculating. They're not saying it is going private.
No way.
Yeah, there's an RBC report. We get the report. And they said that in the report that Celgene is so cheap that if basically the company should consider going private just because the stock price is so cheap relative to its current cash flow situation and all the drugs in its pipeline. I mean, Celgene is dirt cheap too. These are two dirt cheap stocks that are massively out of favor. And eventually value does come back into favor. Right now, the market does not care about value. It cares about growth. And markets cycle. And we have been on this growth, phase here for a lot of years here now. Where market wants growth, that's what is in favor. Value stocks have taken a back seat. But it does cycle, and eventually value stocks will come back into favor. Just like they did at the end of November for a while, a lot of the value stocks came back into favor. They're out of favor now. So it's about identifying those turns in the market as well. But Celgene up $1 here this morning. If you're wondering why it's trading up a little bit more in the overall market, that RBC report has a lot to do with it. But that was a tangent, just talking about Ford. I mean, it's up 50 cents. It's a big move here for Ford. Yep. Breaking out over $11. The book is littered with size. I mean, I look at this F book, 11. 300,000, 1105, 220,000, 1120, 11,000, or 110,000. 1125, 170,000, 1130, 120,000, 1150, 220,000. And this is just, talking the big stuff. There's all 60,000 here, 80,000 here, the 300,000 at 11. It's early here yet too. That book's going to fill up more. So I don't know if it can open up at 1127 here this morning. I think it's going to open over 11. I don't know if it opens this high at 1127.
Recall that when we had Michelle Krebs on, 2 weeks ago, she said, she doesn't give specific recommendations, but she said she likes any automaker that's producing lots of trucks. That's what she said. She said the market is bullish trucks right now, and that's just about it. So that kind of falls into line with what Morgan Stanley said this morning. Joel, what does the chart tell you?
Lisa wants to buy an F-150.
I have one in my driveway. I love my F-150.
Yeah. Let's see here. 2.6 million shares have traded. That is a lot of stock there.
A lot of stock
to be traded. And we're not backing off the pre-market highs. So one potential strategy is maybe throw a bid in there at like $11, because the market holds it down. And yesterday's high was 10.98, so you get it on the gap fill. If it continues higher, and I'm a little skeptical of this too, Dennis, just because 50 cents, sometimes it doesn't even move that in a week. You got to.
I feel like you're going to get a shot back at 11. And full disclosure, I'm just playing it a little bit from the short side, just my day trading account here, because I feel like it's a little bit too much too fast. Maybe the contrarian trader in me here.
Yeah,
long term, it's still ridiculously cheap, the stock, but that's a big move for Ford.
Double top here, up at towards 1150, and maybe we'll test that. But two highs from the end of January, 1147 and 1157. So that's a target on the upside. But yeah, you could come in just one big seller here and knock it down. I'd be more interested in the $11 handle, or if you could scoop it up off the open at 11, I could just pop back up to the current area. But a lot of stock is trading here in Ford. Is it giving a boost to GM at all? Let's just take a look here.
A little bit, yeah.
Yeah. Okay. All right. General
It's up
Motors.
1%.
Joel, we got anything in the S&P is happening right now? I'm just curious. There may not be.
We're just holding at
okay,
2780.
Yeah. I only asked because I just saw a news alert from the Post that Britain has cut off all high-level contact with Moscow, which I don't know.
Yeah.
But, okay. So
no big movement there. All right.
The stock we didn't talk about, and we said we would, was SILC. This stock absolutely murdered yesterday, murdered after hours. It got all the way down to $28 after hours last night. So it went from 60 down to 40, fell another 12 points after hours, down to 28. It has bounced now to $35. This is Silicon. They lost some contract. They were supposed to get a big contract from a Big 10 player in the industry, and that contract got canceled. And that was the catalyst that really kickstarted the sell-off for SILC. But holy cow, I mean, this thing got ugly. It gave back. You're talking about a stock that had actually had a decent run in the last year. 2017 was 40, got up to over 70, 60 has collapsed from. But now we're getting back, when we start talking $30, we're getting back to levels. You got to go to the monthlies. Back in 2015, 2016, you had all kinds of support around 25, 26 bucks. I don't think you're going to get to that after hours low at 28, but I wrote it down because if it does get down there, I think, that's a level that it probably would bounce from again. Anywhere in the 20, like 28, 29, I think there's lots of support down there. Bounced now up at 35. It's still down 5 points from the close. This is a wild child. It's kind of a wild child, at least for today. This contract has really kicked the hell out of it.
Yeah, I do see some monthly support. This is going back into November. Just under $35, two monthly lows, $34.89 and $34.46. So I'd see if they knock it down into the 34 handle, and I was trying to cover short, because I just don't think we're going to see that pre-market low down as 28.20. You can mark it down, but you're not gonna see that. And I don't know, if I was short, had the windfall here, I'd see what happens in the 34 handle. The level on the upside where you could really get a rally kickstarted if you could clear $37 after we made that low at 28.20. Two different times you popped up near the $37 area, but faded. All right, we have gone way over today. So, Spencer, you want to wrap things up and tell us what's on the docket for Thursday?
On the docket for Thursday is Mark Chaikin from Chaikin Analytics. But if you want to catch any part of today's show again, you can do so on our podcast, iTunes, SoundCloud, and Stitcher. If you want to catch our interviews with Evan or FuturesTrader 71. But thanks for joining us today, those of you who joined us on YouTube and on premarket.benzinga.com. I hope you all have a good rest of your day. We will see you folks on Thursday.